Welcome to the Property Nomads Podcast. Welcome back, Marc Champ of Wharf Financial. Apologies from my end. Marc hasn't been on the show recently. Wi-Fi in Mexico was terrible. Every time we tried recording, the Wi-Fi on my end got in the way. So apologies for that. Welcome back, Marc.
Thank you. Thank you for having me, and hope you had a nice trip away.
Yeah, very good. Thank you. Productive, to say the least. As we just discussed off air, loads going on. I think I'm already looking forward to our annual review in terms of our predictions. I think we're well on target. Something that's not quite on target though is the Bank of England and the world inflation rate. It is through the roof. Not unexpected, I have to say. But what have you noticed since we've last spoke?
So what have I noticed? Rates have gone up. Inflation's gone up. Lenders becoming a bit more wobbly, in my opinion. There's been a move towards commercial property, I think. There's been all sorts of things going on. So, it's nothing cataclysmic, but I think we were talking about signs of problems coming up. And I think those problems and those signs are getting bigger.
Yeah, I agree with that. I think more's coming to head. I think I've just done something for our Patreon page when I sort of announced that we're restricting the inflows of Russian gold. It's like, I understand that's a political win, and I say that very lightheartedly. You might get an extra vote or two, but actually it doesn't make any sense whatsoever. Okay. In terms of like applications and mortgage, people contacting Wharf Financial and saying, "Hey, I've got this deal," or what. Have you found that more people are leaving property on the table, as in because the interest rates have gone up, that then flips the deal from being a green light to a red light? Have you had much of that, or is it still business as usual as such?
Well, whenever you speak to a mortgage broker, they will always tell you business is booming and we're doing more than anybody else. But if you look at the facts, there's 50% less bridging applications in Q1 than was expected. So that's the first thing. People can't be doing the levels of business that they said that they would be or they are doing. So that's the first thing. But we have seen maybe a shift from people buying stuff and redeveloping it or whatever that may be, to people realizing they're on a variable rate and they want to refinance. And the lenders, I think, they are very much aware of this. And when customers come to them and say, "Oh, can I just flip over to a fixed rate product now?" It's a whole new application. So it entails fees, valuation, everything. So to be able to move from your variable to your fixed requires a broker. So we're seeing lots of these types of things with numerous people we've had who have been caught on the variable rates and now want to move over to the fixed. So we've been busy in that way, not as busy in new refurbs and new developments.
I imagine that's perfectly understandable, because from speaking to people in and around property, I seem to get the same feedback. I'm talking like non-mortgage brokers, other investors, developers, etc. It seems to be a case of there's always going to be deals and opportunities out there, but actually at the moment, the feedback that people are saying is everything's bubbling away nicely. It's got to correct at some point. So unless you're getting a cracking, exceptional deal, a couple of people are just sitting on their hands at the moment.
Yeah, people are sitting on their hands. And I think there are opportunities out there because I think people will see that the market maybe is turning a little bit now. So maybe they're thinking maybe we can cash in, sell the properties. We've got other expenses we need to look at. So people may be looking at that. And, we're still having a decent number of new business. But like I said, it's not as much as it is. And there aren't that many undervalued property transactions coming through. And that always bugs me, the below market value stuff, because it's not below market value. It's what the market is paying for that property. Mm-hmm. So it's just lower than the asking price. So Yeah, and lenders totally recognise that, and valuers do as well. So, there could be some more bargains, around the corner.
No, I wouldn't disagree with that at all. Inflation at the time of recording, 9.1% here in the UK. Again, not something that's unexpected. I think we've said multiple times, when you increase the currency supply, but you're not increasing the amount of goods and services that are available, and you've got more currency chasing the same amount of goods and services, a 3-year-old can tell you that would increase prices. And then the flip side of that is, if you want to look at it the other way, because more currency is being created, you're devaluing the pound, hence why things are going up anyway. So the things work in tandem, depends how you look at it. Point of that being, as we said at the start of the year, inflation is going to be around for a while. There's a lot of stuff needs to be sorted out. We obviously haven't had a winter yet without dealing with our friends from the east, shall we say. So there's a lot of crap coming our way, I think. Has that been reflected in business at all, or any other thoughts or comments from the people that you deal with about inflation?
I think the thing that has been affected most is the interest rates. They've gone up. We've seen them increase across the board. And what I've seen, the more specialist lenders have come more into play now. So where everybody was using Lend Invest, Landbay, and it was, chasing a really good rate, things that are getting through are slightly more difficult or specialist. And therefore, people like Shawbrook are coming back into play. And if you think, Shawbrook were born in 2011, I think, when there was a bit of turmoil in the world. We were coming out of the 2008 crash still. And they really came to the fore then. And I think that the challenger banks are going to be well placed. And you have to think also with Shawbrook as an example, they fund a lot of the bridging market. If the lenders, the bridging lenders, usually have a Shawbrook funding line. So Shawbrook have a finger in a lot of pies, and I think this type of market is where they do their best business. So I think need to look out for them. The other thing that I saw today is what was it? In London, first-time leases for businesses have gone up a massive amount. I can't remember what the actual statistic, but in the FT today, it was a stat that I saw. And that shows that businesses are maybe rebounding or new businesses starting. So where people are moving away from these big high street businesses, smaller businesses are coming into play and taking new leases. So that's surely a good thing for the commercial property investor as well.
Yeah, I think there's going to be a lot of changes happening in that market space moving forwards. I would flippantly say that if you struggle to get the railway to work, that probably isn't going to help things anyway moving forward. But that's a different podcast, a different subject moving forwards. Interesting. Interesting. It goes back to what we've said time and time again. There will always be opportunity, and if it isn't purely residential, then commercial is your other, or agricultural, land, that sort of stuff. There's always plenty of things out there. You just got to know what's going on and who to speak to.
Yeah, and I think it is very important that you do that. And when looking at lenders, especially, I think it's a good idea to find out a bit about their background and their funding lines, because there's not many customers that come to me and say, do you know what, I want a stable lender who will definitely be here in 5 years. It's always, what's the cheapest rate you can get me? And I think at this point in time, stability is something that you need to think about. And you have to remember, property is a long game. It's not many people make a lot of money quickly in property. So thinking about the stability of the lender, the robustness of their funding and their finances in the background is important.
Let's just dig into that a second, because I'll hold my hands up. That's not a question I've ever asked either in my years of doing this. So I think that's very poignant. Why? Obviously, you've just explained why lender stability is important, but what if let's just say Challenger Bank A. Let's say we take out a mortgage. You and I are in a property together. We take out a mortgage with Challenger Bank A. And let's just say it all goes a bit wrong in the next couple of years. They go bankrupt, hypothetically. What happens then in terms of stability? And why should more people be asking said questions? I've never thought of that before, Mark. Great point. Let's dive into this.
Well, I think if I give you a live example,
okay.
We have a customer at the moment who is experienced property investor. They have a property which is it's just a vanilla buy-to-let, decent LTV, 50%, something like that, maybe 60%. And they have decided to go with a lender who has a very cheap rate, and it was about 0.5% cheaper than other options. This lender went a bit quiet on us, and we were a bit worried about that, because lenders don't usually go quiet when they're wanting to get a loan processed, because it affects their SLAs and what they can tell everybody else. So we went a bit quiet, and after a little bit of chasing, we received a automated email saying that basically the lenders lost their funding line and they are looking for a new funding line. But as of now, they can't process the transaction any further. So this transaction had been through valuation and it was in legals. So it's a difficult thing, because they're not saying they're closed for business, but they're saying they've got no money to lend anybody, which is difficult. They think they're going to get a funding line, and that's apparently in process. But when asked about, what about the customer's valuation fees, they won't refund them. So that is a consideration that, you can go to the financial ombudsman and raise a complaint. But if there's no money in that business, then I think it'll be quite difficult for anybody to get money out of the company. So what I'm saying is you need to pick your lenders carefully, because you can lose fees, you can lose a lot of time. And if it's a purchase, then you could be losing the property. If it's a refinance, then, the lender that you've got the original deal with can put pressure on. So no lender likes doing that, but it can happen. So picking the right deal from a stability point of view is essential. And, if you're with a broker, you can go and find an alternative option. But when you think the average length of loan process is 3 months, I would say, that's a lot of time wasted and money. And it's, something that not many people consider when taking out a loan.
Fair enough. It's not something that ever crossed my mind, in all honesty. So I'm sort of scribbling away, making notes.
But then on the flip side, you could think, if you went to to RBS in 2007 and you asked anybody, how stable is RBS? You'd be like, well, it's a bank. It's it's huge. Nothing's going to happen to that. But it does. We had a deal. Was it before Brexit or before COVID? I can't remember. I'm not sure when it was, but there was an issue, and the particular lender. So I don't like slagging lenders off, but this particular lender pulled all their commercial products. So anything that was leased out to a trading business, and this was in legals. Customer had paid for legals and valuation. Just pulled it. We will not refund the valuation or the legal fees. So the customer lost a few £1,000s on that, and that wasn't right. And it was one of the big banks, and it wasn't fair, not fair at all. It's just their decision that it was too risky in the current market, so they were just going to pull everything. So difficult one.
Yeah, crazy stuff. Well, I appreciate that. It's good practical advice, which is what we enjoy giving out on these episodes as well. Looking at my notes, though, I've nothing else in mind. There's nothing I've sort of paid attention to that sort of crops up. But anything your end that you think is valuable to share for this episode?
I think the valuations, again, make sure you do your due diligence early. valuers are challenging a lot of things at the moment. It's difficult to justify something after a valuer has given a value. It's hard to work backwards. So make sure you're proactive with it. I think that's important because we're seeing a lot of values that are coming up a bit short now. So that's one thing I would say. What else is there that we're seeing? Not as many new bridging lenders coming to the market, which isn't a surprise. I think there's, a year or two ago, there was so many new ones coming into the market. The cycle seems to have moved on a little bit. And now I would be just keeping an eye open to see which ones decide not to do any more business rather than new ones starting.
Perfect stuff. Well, we'll keep our eyes open. We'll look forward to sort of catching up in the next few weeks and seeing what happens in the summer. Summers are normally, especially August, that's sort of, I say quiet, relatively, not there. Sometimes government tries to sneak things through the back door in August. So we'll keep our eyes open on that. And as always, I say to people, go to Wharf Financial website. The weekly newsletter is fantastic. And if you want to get hold of Marc, details are in the show notes. Marc, a pleasure as always, and look forward to doing it again.
Excellent. Thanks a lot.